Alrighty, guys. Good morning. Welcome to this Friday, April 4th. And good grief, guys. This is what a bloodbath. What a way they're waking up, right? So I guess the market reaction was as flat out straight down. There was no shot of the over. I thought that when they announced it on Wednesday that might have been an overreaction since people had plenty of time to prepare themselves for potential tariffs, but no, no way. That was pretty freaking ugly. And so yesterday was a big sell-off day, and they started in the overnight as well. Another big sell-off day, 1,000 points down again on the Nasdaq. They're down to 18, down in the 17,000s now. And the ES is down in the 5,200s. They've been down to 5,210. So, ah, man. All right. So that's what we had to start with. And not much to look at, right? It's just big, flat, straight lines to the downside. So a day like this, you just kind of had to take a big, deep breath and sit back and kind of try to figure out what the market is trying to do. Because this is just a flat out panic going on at this point. The last sell-off came early this morning at 6 o'clock. That last sell-off, that was the Chinese putting on retaliatory tariffs. And yeah, the market is just having a hissy fit in a big way. So that's where we are. Market in a complete meltdown mode. And the overreaction, I think, continues. It's well, we'll see how this whole thing shakes out. And maybe I'm proven wrong at the end, but I think I think this reaction is a typical market flat out panic mode. And the guys selling at this point, the guys which are, I don't know what they expect to have how much further, how much lower they think things can go. But at this point we're down in the 5,200 level. That's a good. It's 15%, 20% is going to be bear market. I think that 20% from the highs. I don't even know what the highs were like in the. What was the highs? Go back way back up here. Way back up. See how far down we went. So the highs were up here in the 6150s, right? So 600 points down, 10%, 1,200 or 1,300 points down. So they will be down at the 5,000, yeah, 5,000. So 54, 548. If you get down to the 5,000 or 4,800s, that's when you are at bear market territory. So I don't think the market is in the bear market though. This is just a flat out hissy fit reaction on the stock market for tariffs because they probably can't reprice it properly or it's just a full on panic. Anyway, so news this morning. We got an employment situation report coming out today at 8:30, and then we have Jerome Powell testifying at 11:25. And the Jerome Powell thing is going to be interesting now with the market reaction in hindsight, or now we know how the market's reacting to it and what the tariffs are. We'll see what he has to say about the rates and what he's going to do on his side, if anything. But employment situation at 8:30 today, that's the only really piece of news we have. Then you have Powell speaking at 11:25, at 12 and 12:45 we have two more Fed speakers. But that's our Friday. And I think the Friday is going to be just flat out dominated by what's going on here in the market. So I don't have much to. The only thing we can say is to trade it from the short side of the market with a lot of caution. And I mean, you can see the snapbacks are worthy of a full day's complete rally. The sell-offs are massive. And so there's a lot of volume. So it's institutional selling what's going on right now. It's not just the algos running it. This is like dumping major stock positions. And when that happens, anyone's guess is good. So we are way down. And the only thing you can do is kind of a day like this, you can probably fall back on the intraday levels. That's the best you got. Because you don't quite know what the support area is going to be down. We haven't been here for quite a while, so as we find where support and resistance really are at, the best you can do is to trade the intraday levels. And we can see here around the mean, we started off here. If I go back, scroll back here just a little bit, you started off here in the overnight. It started off going like this, and here this is kind of where I left it last night. It started heading lower, big move down like that. Like, okay, that's not a good sign. And then that nice little rally following that. into the back up again, and then the whole thing came apart here in the morning in a big way. And that's the retaliatory tariffs from China. So it's going to be back and forth like that, and no one expected China to just fall over, but it's going to be sorted out eventually as they figure out what they're going to do. And if they end up with I think the biggest issue is really the short-term impact for the companies which have businesses in China, which obviously going to get squeezed in this. Those goods are going to get like Apple, for instance, and making a lot of their phones in China. Those are going to be more expensive in the short term until Apple moves their production somewhere else, but they don't have the same kind of tariff situation. So it'll take a few months and half a year for that to sort out that kind of stuff. Unless they just flat out they agree, like, yeah, maybe we should just drop the tariffs across the board on both sides of it. And that's the reaction I'm waiting for. Initially, I guess it's going to take a little bit of time for some countries to get there, but if everyone drops their tariffs, there's no tariffs, right? So there you have it. So I would say, I mean, so for today, employment situation coming out at 8:30, we'll see what kind of reaction we're going to get on that one, but it could be a big reaction. I don't think that's necessarily going to dominate the day. It is going to be more about the tariff fallout and who's selling and who's trying to be bargain hunting. Because right now, bargain hunting, if you're bargain hunting yesterday, you're sitting there, oh shit, I was too early. And if you have more cash on the sidelines, at one point it's going to be good. But I mean, I wish I had some more cash on the sidelines at this point. It is just a flat out brutal situation. And you can get, I mean, Meta so it's down to like 500 again. It's like, oh my God, it's down to 500. I mean, you bought, you added some positions at 10% down and 15% down, and now they're like 25, 30% down. So the reaction is crazy. And on the big techs are really getting hammered. Repricing valuations and what's going on in the market right now. So I would start from the short side. I mean, that's the only way you can really go with this. Trading from the short side, favor that. There's no, if you get the big snapback, there's certainly long trades in that, but I would be super cautious trading this today. These bars are huge. There's a little bar right there, it's 70 up to 80, 87. So that little bar here is 17 points, right? Little point, okay? So you're trying to trade this, it's going to be very difficult. 44 up to 72, 30-point bar. So if the bars are 15 points, the bars will look small on your chart. It means that something crazy is going on. And you don't want to be playing around with a 5-point stop at that point. It's just going to be very, very, very dangerous. Or it's going to be very conducive for you getting shaken out and just lose a bunch of money. So I would just hold off a little bit, let this settle down, and then see where the market is likely to go for the day. If they're going to be going sideways, or if they're going to. I think a lot of the selling may be over in the overnight, the way this looks, but you never know. So starting off on the short side, it could be a snapback if they start retracing these single print T's at 53.20. These little T's here and about that little node. We may have a shot at. Let's see, this didn't snap back. Let me see. I enable my centering again. So you can see here we're down in the 5300 level, but we are way down here. So they're building going back and forth a little bit down here. But if they start retracing back up above that 5320s, 15 to 20s, we may have a little retracement trade going on, but it's just too volatile to really set the trend. I mean, you can see here that's how much it's moving. So trade this with a lot of caution. I don't have a good direction to pony up here, but I would just look at this from the short side still. And if the selling stops, look for more range bound trading. I'm not sure we're going to see a lot of bargain hunting going on today. So that's why we are on the at least to get started. Now we'll see. I mean, if they start retracing hard and getting up above that 5320s, maybe the long side is going to start developing throughout the afternoon. But at this point, I think it's too much craziness going on. You can see how the histograms are absolutely crunched together. They're usually pretty readable, but not today. That just tells you there's a lot of stuff going on in the markets. Looking at the Nasdaq and the bonds, so ES traded from the short side of the market with a lot of caution today. I might just sit on the sidelines, sit this one out. It looks like it's going to be a little bit too volatile for pretty much anything. Bond market way down. Sorry, way up. The yields are way down. flight to safety in a big way. They're taking out all the edges. They're taking that 120 edge out. They're retracing to the upside. So bond market could go quite a bit higher. The next attractor is going to be at 124. Up here, they were back from September last year, 124. That's where they're heading right now. And I'm just stay on the long side on the bonds at this point. So trade bonds on the long side of the market, look to buy weakness. At this point, they already taken out the edges I drew up here this morning. So now they adjusted this to the downside a bit. But it's I would be looking at buying against that 120.102s, 120.28 down to the 120.22s. If it starts trading below that London low, maybe take off the long bias and go back more range bound. But this is a lot of range. So we're looking at 120 up to 120, almost 2 point worth of a range in the overnight. That's a pretty big range on the bond. So trade up on the long side of the market. You can see here China tariffs kicked in, big reaction on the bond market as well. NASDAQ totally fell apart, big reaction on that guy too. Some stocks I don't think have, like Meta doesn't have a big reaction with the big exposure in China, but they're getting hammered. So everything is getting hammered across the board. So that's kind of how it goes. But at this point, the edges I drew up this morning are very preliminary. I mean, it's basically the little information you have, but it's totally falling apart here in the NASDAQ. They were down here. They were at the 1818s. We closed around the 186s, and they're down to the 17.8. So 800 points down on the NASDAQ right there in an overnight. Just tells you that it's a flat out capitulation of the markets. It's total flash. Sell everything. I'm out. Sell everything. And this is usually a time that things bottom out when it looks like this. This is I haven't seen a capitulation like this for a long time, but this is what this looks like. So today, trading the NASDAQ is probably a fool's errand. It's moving too violently, but it's I would say be above that 250s. Maybe a long retracement trade could develop, but at this point, the range is really up to that 250 down to the 780s, and it's going back and forth in this range right now. So anyone's guess where it's going to go, but trade it from the short side of the market at this point. Snapbacks can be violent and big, so getting short on a pullback, it could get you in trouble as well. So it's like these pullbacks are huge, even if it doesn't look it on a chart, but the range is also massive. So you're trading with a 100-tick stop. These bars are just this part of the last bar here is like 111 to 180, so 70 points. It's like three times my stop size, these little bars. So it's just a very dangerous scenario to try to trade this. If you get on a trade, it's going to be you can get in, get break even, get shaken out literally in a few seconds. That's how crazy this is right now. So I would just probably my recommendation today would be to sit on the sidelines and let this craziness calm down a bit. Try to find trying to see what the market is trying to do first before engaging it. But trying to be too aggressive trading this market is probably a bad idea. Finally, oil and gold, but ES NASDAQ traded from the short side still. It's who knows if the craziness is over, but there's no rush to get long at this point. That's for sure. Looking at gold is range bound. I think they're pretty much holding in the range. Interesting though that gold gave us such a big hint before this happened. So before the tariffs came out, the gold market, they had this big freaking rally. They took off from that 3,030, $200 to the upside. Market wasn't doing much, the rest of the market, but now it kind of starts making sense, right? Gold market is well informed, So they're up here. They are still holding above that 3115, 3100 level. So I would just stay range bound on gold. Watch that lower edge at the 3100s. That comes out. Potential retracement trade all the way down here to the 3030s. But that is so gold is not that crazy right now. Which tells you they already priced in this kind of stuff. So they priced in a lot of volatility in that. So the guys sitting on gold are sitting happy right now, watching the stock traders totally melt down and having hissy fits and heart attacks and all the rest. Anyway, I would trade gold range bound. Watch that lower edge at the 3100. See that comes out, and it's not the perfect edge. You see the three levels at the 3110, 3105 down to the 3100. If all three comes out, I would hop on the short side and definitely aggressively look at the short side. At this point, though, I'm thinking range bound trading going between that 3100 and the 3170s at this point. But it's pretty volatile as well on gold. It's not by any means not volatile. It's just not as crazy as the rest of the market. So range bound trading on gold at this point. Let's see where they end up going here. But I would say they watch that lower edge. If they're going to retrace further, then that edge is going to come out pretty early. Oil, massive retracement massive sell-off on oil all the way down here to the 60 mark. So oil is also pricing in a global recession. I would think that would be pricing in. I'm not sure global recession is the right way to word this. I mean, I'm not sure the slowdown is an economic slowdown in that it's going to be the absolute result of these tariffs. So that's the fear out there, and lack of demand for oil. Boom, there you go. Oil is right down now to 60. Now, it's great for fishing boats. I mean, diesel is going to be cheap. Eventually here, it's going to be repricing itself pretty good. A lot of good downward pressure on inflation with the prices coming down like this on oil. But look at that. That's a falling off a cliff kind of thing on oil. So trade that from the short side. Again, look for violent retracement trades. If they start trading back up here above the 62.60s, maybe have a retracement trade heading back to the 64.30s. But we have a lot of range on the upside, so who knows where they're going to go with this guy. And I would just trade it from the short side of the market at this point. Just this couple of a little bit. There you go. So up here we have a few edges which are a reverse retest of the London high. That would be testing that 67 level, but I'm not sure we're going to see that kind of a retracement, but who knows? Oil is moving pretty crazily as well. So trade oil from the short side at this point. Watch that upper edge at the 62.60s. Nothing here is very strong because with this kind of in the virgin territory, if you wish, haven't been down here for quite a while. It's hard to say which edges are really good. So both ES and NASDAQ, and oil are all in territories where we don't have good data right now to really say where support resistance are going to be at. So I would trade all those with very, very cautiously today. Gold, we have is trading in a decent area. We have good edges there to lean against, even if it's pretty volatile. And bond market is, of course, pretty good to trade. We have good data there to lean against as well. So if you're going to trade something today, bonds and gold could be your options. ES and NASDAQ, I would probably sit on the sidelines for a bit and see what the market is going to do. See if it gets some sort of a range or pattern or something developing which is tradable. But this is crazy stuff going on right now. So back to the ES, and we got about 6 minutes before the employment situation comes out. Big report, but it's going to be totally dwelled out or drowned out by all this crazy stuff going on right now. So what a Friday. Thank God it's Friday. Right? I'm gonna have to go pour myself a huge cocktail after this is over, but we'll see. Anyway, good trading, guys. And as I said, trade this with a lot of caution today. I'm probably gonna sit on the sidelines for most of the day unless I see some really good opportunities. But I'm not going to be aggressive in a market like this. It's just too many cross currents, too volatile. Unless you can trade with the correct stop sizes, then today is the day you may want to just sit out. Alrighty, guys, we leave it there for now, and I'll see you back at 11:30 for the next update. So good trading, guys. Later.